Disclaimer, so information herein is reliable but not guaranteed. I'm not a lender myself, so if you do have any loan questions, make sure that you talk to a licensed lender. This is for informational purposes and is not meant as an advertisement for myself. This is a general course designed to provide insight to the advantages of a VA loan. You'll also see some information here on the screen. I'm required to provide that by the state of California. So about myself, I am an Air Force veteran. I served 10 years in the United States Air Force, 8 of which here at Vandenberg. I'm a realtor. I still serve clients even today with VA loan needs, obviously. I run numerous groups on Facebook to include the Vandenberg PCS group. So if you guys have anybody that's PCS into Vandenberg, definitely send them to that page. There's a lot of useful information. 2 fun facts about myself is that I have a ton of outdoor hobbies, and I also spent about 960 hours this year alone doing real estate training. So different programs, different situations, and so forth. So moving forward, what is a VA loan? So a VA mortgage is a specialized government-backed home loan product. You go to a qualified lender to get pre-approved, then you go to a real estate agent to shop for a home, and then you're going to make your offer. Once you make that offer, it's going to go through underwriting and appraisal just like any other loan would. Although the VA loan is a federal program, the government generally doesn't give direct loans to veterans. Instead, private lenders are going to finance a loan, and then the Department of Veteran Affairs is going to back it financially. So why the VA loan, right? So some pros and cons here. You're going to have 0 required down payment. There's no primary mortgage insurance, which we'll talk about a little bit later. It's easier credit, right? So there's no minimum required credit score. There's also no prepayment penalty. Some of the cons to the VA loan are going to be that it's for your primary residence, but I will talk about how you could purchase second homes and then sell homes up under the VA loan in a little bit. There's also the VA funding fee, which a lot of active duty people don't necessarily know about, but in some cases, this fee can actually be waived, and we'll talk about that a little bit later as well. It's slower closing just due to having some extra steps in there that aren't necessarily required in other loans. And it's not for everybody, right? So you have to have served your country in order to qualify for the VA loan itself. So some quick side-by-side comparisons. So conventional versus VA versus FHA. So we'll start off with conventional. So as you all may have known already, borrowers with excellent or good credit are going to be the ones who qualify for that conventional loan. They have to put down a minimum of 3%, but they'll have to pay what's called private mortgage insurance. So that insurance is basically telling the bank, hey, if this person forecloses, we'll cover that difference between the 20% that they would have paid. So that way it's not a total loss for the bank. The minimum credit score for a conventional loan will be a 620, and there's no upfront mortgage insurance fee. With the FHA loan, borrowers with a higher debt to income ratio, which we'll talk about in a little bit, or lower credit scores can qualify for this one. It's 3.5% purchase price for the minimum down payment. With a 580, you get that 3.5% down payment. With a 500, you have to make a 10% down payment, and there's a 1.75 loan amount up front, and then they're going to charge you an annual fee. So the thing we're all here for, which is the VA loan, obviously is for veterans, military service members, and spouses. And the minimum down payment for that is absolutely nothing, right? So that's a very good thing. You'll find out why. There's no minimum required credit score. Unlike the other programs, there are no guidelines for it. Although I will say, if you have a really low credit score, You may have a hard time qualifying for the loan because there's other problems that you may have. And then there's an upfront VA funding fee, which could be from 1.25 to 3.3. But again, there are some exceptions to that. So types of VA loans. So there is 4 main types of VA loans. The main one is going to be the VA purchase loan. That's the common one. It's pretty much the same as any other standard mortgage. You also have the IRRL loans, which are basically a refinance. So right now, if you go out and you go buy a house at 6% interest rate, and eventually the rates drop back down to that 2.5, like we saw a year ago, you're going to be able to refinance your home to that 2.5% interest rate. There's also the VA cash out refinance. So if you buy your home today and it's $550,000 today, and then a year, 2 years from now, it's $650,000 or more, you can actually refinance your home and then get a check for the difference, right? So they're going to give you some of that value in your hands, and that money can be used for all sorts of things, paying off debts, making home improvements, and even emergency situations. And then there's the last thing on here is the VA energy efficient mortgage. That's a lot of words to basically say that they will pay for your energy efficient improvements, so solar panels, things of that nature. So what is the VA funding fee? So you heard me talk about that before. The VA funding fee is a way for the VA to ensure the program keeps running in the future. It takes the burden off of the taxpayers themselves and actually makes sure that the VA loan program will be around for people in the future. So the fee obviously varies on your circumstances, but typically first time your fee is going to be 2.3% of the purchase price. Now that gets wrapped into your loan, so that's not something you pay straight out of pocket. So you don't have to worry about that. And then you might not have to pay the funding fee if you're a disabled vet with a service-connected disability. So for you disabled vets out there, there is a funding fee exemption. There's also property tax exemptions. So even with 0% disability in the state of California, CalVet has a program where they'll take $100,000 off your tax assessed value for your property taxes. So that's pretty sweet. And I believe there's a lot more exemptions out there for higher disability levels. Eligibility for various housing grants and programs as well out there. You have the SAH or the SHA, which are $22,000 to $100,000 grants that provide the ability for a disabled veteran to make their home accessible. You also have the TRA grant, which is if you're a disabled veteran and you live with a family member, they'll give you 40 grand to make that home accessible. And then there's also the HISA grant, which is up to $6,800 for service-connected disabilities. So that way you can make structural alterations. So if you need a rail or a in-home elevator or something like that, they can help provide. The VA loan process, right? So this is what we really came here for. So the first step is either talk to a real estate agent or a loan officer, but we're going to talk about how it would go if you talk to the loan officer directly. You meet with the local loan officer, you tell her you want to apply for the VA loan. Then you're going to get your certificate of eligibility, which I'm going to break all of this down here in a second. Then you're going to complete a mortgage application, pretty much the same as everybody else. So they're going to verify your income, your credit, other factors like that. Then you're going to group up with a real estate agent where they're going to take you out to actually find a home. Once your offer is accepted, you're going to sign the purchase agreement, and then that agreement is going to start going into the underwriting phase. During that process and time, you're also going to have an appraisal and a few other things like this. And I know I'm going pretty quick, through these things, but I'm going to break these down here in just a second. And then, so once it goes through that processing and underwriting phase, then you're going to be able to close on your home, which is when you actually get the keys and are able to move in. So who qualifies for the VA loan? So for all of our active duty people, anybody who served 90 continuous days on active duty will qualify for the VA loan. If you're in the National Guard or Reserve, you need at least 6 years of service, and you have to meet one of these criteria that are listed below. So again, I am recording this. If you want to see this information again, feel free. Scrolling through too much. All right, so how do lenders verify your eligibility? How do they know that you had that 90 days active duty service or that 6 years in the Guard or Reserve? Well, they're going to get what's called a COE, so a Certificate of Eligibility. So this is kind of confusing, especially when you get out and you're getting your VA benefits, because there's also a Certificate of Eligibility for your GI Bill. But this certificate is different from the rest because it's specifically for your home loan, and you can actually get the certificate while you're still active duty as well. A lender can typically provide this COE to you with your social security number and your date of birth, if you want to go that route. But if not, you can also retrieve this from what's called the e-benefits portal. In some cases, you don't even need this document before applying, but I personally would bring this with me when I was meeting with their lender. As far as finances are concerned, there's no minimum credit score with VA loans like we talked about already, but your debt to income ratio needs to be at least 41%. So to figure your debt to income ratio, you're going to take your monthly bills, and then you're going to divide that by your gross income. And if you have 41% or less, you will qualify for the VA loan. And if it's 35% or less, you would actually qualify for a conventional loan. So you can see you can have a way higher debt to income ratio with the VA loan than you would ordinarily, which is a really good thing for some of us out here. Some forms of acceptable income are going to be your base pay, BAH. If you get disability pay or retirement income, BAS, your clothing allowances, hazard pay, overseas pay, so on and so forth. All of those pays are going to qualify as acceptable income. Another thing you can add to that as well is if you have a side business, right? So if you do sewing, or if you decide to come over and sell real estate with me, right? That income can be counted towards this as well. And if you have a spouse, you can actually combine you all's incomes together. But one thing to consider is that if you do combine your income with a spouse, you have to take into account their debt to income ratio to make sure you're up under that 41%. Occupancy. So this is another eligibility thing, right? In order to get that VA loan, you have to live in it. So it has to be a primary residence. So you can't use the VA loan to buy a second home if you're not going to live in it, right? So you can't buy an investment property or a vacation property, at least not right away, right? So you're going to buy a home and, you leave and you move somewhere else, within 2 years, you can actually still rent out your last home that has a VA loan on it, but you can't buy it primarily for the purposes of investing right away. All right, so we've reached the next section in these slides. We're going to talk about the process once you're pre-qualified. So once you get pre-qualified or pre-approved, it's the time to go shopping for homes, right? So you're going to meet with an agent now at this point, and they're actually going to take you out and you're going to go look at the homes that you really want to see. One thing to think about is maximizing your VA loan if you can. So in California, it's really hard, but in other places, if you decide to move somewhere else, you can actually buy multiple unit properties if you can afford them, up to what's called a fourplex, which is a 4 residential unit property, which is pretty sweet. What this does is it actually like defers or can even like eliminate your mortgage payment. You're basically getting other people to pay your mortgage. So that's pretty awesome. The homeowner must intend to reside in one of the units for 2 years though, right? So remember we talk about that occupancy requirement, excuse me, guys. You have to live in that property that you purchase. So right here are the steps to the normal home buying process. This is the same no matter how your loan goes. So you should meet with a real estate professional. You should get pre-approved. Once you get pre-approved, again, like we said, that third step, we're going to start searching for homes, which I'll give you some tips for that in a minute. You're going to make an offer, and then you're going to negotiate that contract. Once you get the contract all settled and everybody signed it, your loan is, or your contract is going to go into escrow. Escrow is a fancy word for a third party. They're basically going to make sure that both the buyer and the seller agree on the terms. Then you're going to get into the final details, which is pretty much preparing for closing. So you're going to get all your loan documents and everything in. You're going to make sure you sign all the paperwork. And then you're going to go into the actual closing itself. And again, all of these things we're going to cover here shortly. So when you're searching for a home, there's 2 different types of home buyers. You're going to have emotional buyers who are looking for the home that they love. And you're going to have equity buyers that are trying to find a home that's going to increase in value the day that they close or shortly after closing. A good real estate agent is going to not only find you the home you love, but he's also going to make sure that you get it at a price that's equitable, right? So you're going to get that increase in value. And not only that, but we're here to save you legally and to save you financially. There's a lot of ways of which you can lose money in a real estate transaction that you ordinarily would not have to pay. That's why shopping for a good real estate agent is super important. Another side note here, just about the real estate agents themselves. They're normally paid through seller commissions. So if I was your real estate agent and you were a home buyer, my services would be at no cost to you. It's one of the craziest jobs out there. I work to get paid less, right? So I want to get you into the home for the least amount of money possible. We're just going to watch a quick video here on why you should choose a real estate agent. I might stop it a little bit short.
Whether you're looking to buy a home now or you're just curious about what's out there, there are many websites that promise to give you what you're looking for. However, in today's market, using these sites to find your next home might mislead you into thinking you're seeing every available property that could meet your needs and match your budget. But what you can't see is what these sites won't tell you is that there are dozens, if not hundreds of better homes at better prices hidden in plain sight. So before making one of the biggest decisions in your life, you want to be absolutely certain you're seeing all of your available options, right? Because if you ask any real estate expert, they will tell you the nicest homes and the best deals always go quick, regardless if the market is up or down. This means you are always in a race against smart home buyers who know what they want and have been prepared by an expert to take immediate action in order to get it. Yes, what we're talking about is selection. Just like your taste for cars, clothes, and music, there is a house out there that uniquely fits with who you are and where you are in your life. Now, your problem won't be getting excited about moving into this perfect home, but rather it will be finding it fast before someone else while buying it at the lowest possible price. So, contrary to popular belief, finding an expert certified to advise you on all of your options while preparing you to act fast is critically more important now than previously ever understood. Here's another way to look at it. You wouldn't show up to represent yourself in court or hire an attorney who lacks expert credentials. Because like the legal process, Unknowingly choosing an agent who isn't certified in the home buying process can unnecessarily cost you tens of thousands in closing fees, repairs, and other expenses. But most importantly, it can cost you your dream home. So as someone who is looking, what can you do to ensure when you're ready to buy, you find an expert who is trained and certified to find your perfect home at the perfect price before someone else grabs it? Thankfully, research conducted by the National Association of Expert Advisors, an independent members-only organization, has isolated 81 unique variables that occur during the home buying process that result in perfect homes at the perfect price, going to the fastest buyers.
All right, we're gonna skip past some of this content. So again, this is not meant as an advertisement for myself, so I don't want to press you guys too hard on the National Expert Advisors Association here. So we're going to skip forward.
Whether you're looking to
So once you look on Zillow or you look through the MLS, which is the multiple listing service, which is what you're going to get from your agent. He should give you access where you can put in, your criteria to find the right home for you. We break it down into all different categories, how many bedrooms, how many square feet, etc. Once you get that, you're actually going to go to what's called a home showing. So we're going to pick 3 to 5 homes that you're most interested in, right? So my advice here is to maybe stick closer to the 3 number. I'm going to tell you from being on multiple showings that once you get to 5, you have almost certainly forgot the first home that you were looking at. It doesn't necessarily mean it was bad, but you might have forgotten a few things and you might have to go revisit it. So for your time, I think it's better to stick closer to doing 3 homes at a time versus 5. I also advise you all to stick to your budget. So that means don't get too outlandish with what you're looking at, right? So oftentimes we can go slightly above and under your budget. But the best thing is to stay near your budget, because there's no reason in looking at a home that's $700,000 when you're only approved for $500,000. Another thing here is never discuss opinions of a home or financial details with anybody that's not your lender or real estate agent. So they have the obligation to their clients to take the information that you tell them and relay that back to their clients, right? That's an obligation they have. That does you no good. So you want your own person there who has an obligation to you. So that way, when you decide to talk about certain things like what you like in a home, or that you really love this home, or, you're not sure if they're willing to work down on the price, those are things you want to keep in private. Like don't blurt those out to somebody that doesn't work for you. Also, pack snacks. Sounds funny, but if you do 5 homes at about 45 minutes to an hour each, it's going to get really tiring. So definitely bring some waters or, some jerky or whatever it is. And then obviously set aside an appropriate amount of time. So I would say on average, it takes about 30 minutes to about 50 minutes per home to actually look through them all. And then the last thing is, if you show up to a home and you can tell from the outside when you pull up in the car that you don't like that home, just tell your realtor and just move on. It's wasting your time. It's wasting their time. So the best thing to do in that scenario is just to say, hey, I don't like this one. And then you can move on to the next one. Assumability is another good thing to look at when you're trying to buy a home. So buyers can assume seller's interest rate, which is super awesome. So if somebody had a VA loan previously at 2.5%, and the rates are currently 6%, you can actually buy their house at the 2.5% rate. Why is that good? Well, for the current market conditions at roughly 6% interest, for a $550,000 home, you're probably going to be paying somewhere around $3,900 a month. At 2.5% interest, you could afford an $800,000 home, right? So it's going to be about $50 different, but at that lower interest rate, you can afford a lot more, which is also why that refinance option exists, right? So if you ever get a chance to refi your home at a lower interest rate, definitely do it. It's going to save you some money. Another good thing about assumability is that most of your closing costs aren't included. So that's going to save you thousands of bucks right there, right? You're going to miss out on all those origination fees and things like that. I can't tell you exactly what they are, right? That's a loan officer kind of thing, but it does make it a lot easier and a lot cheaper. Non-veterans can assume the loan as well. So say I had a person come up to me and say, hey, can I buy a home under a VA loan? And then, you know, later on down the road, sell it to my uncle or somebody else. And it was like, yep, you absolutely can. And they can actually assume your interest rate. And then the only caveat to that is they talk about this VA loan entitlement. So it makes it sound like your VA loan is capped, but as of 2022, there is no cap to your VA loan. So you can get as much house as you can afford, right? And then if another veteran assumes your loan, that whole entitlement thing goes completely out of the window. That becomes their loan, and then you're free to do whatever you want. Your hands are washed clean. So that's a pretty awesome thing. When you're searching for homes, definitely look for some of those. Making an offer, right? So you found the home that you were looking for, and now you want to make an offer. The first thing I would say is do your homework with your agent, right? So there's a price range for every home. So every home has a lower side of that price range and an upper side. Depending on your market conditions, you want to make an offer in that range. So I would say right now, it would be closer towards the lower side of that range for a home. And then you're going to come with some earnest money, right? So this can be as low as $1,000, but customarily it's 1 to 3% of the home's value. This earnest money just shows the seller that you're serious. So this isn't money that you're giving the seller necessarily. This is just money you're putting up to say, hey, I'm serious about this. I want to follow through with the contract. If for whatever reason you made it through and you had your contingency period, which we'll talk about in a minute, you pass that and you say, hey, yeah, no, I'm good to go to buy this house, and then you decide to back out, well, then you lose your earnest money. So that's kind of the purpose of earnest money there. But you always want to have at least something there for earnest money deposits, just so the sellers know that you're serious when you make your offer. The next thing is make the best offer the first time. So you're going to, I'll just tell you how I would tell my clients, right? There may be other people competing on the home. There may be, there might be certain criteria that these homeowners are looking for. You want to put your best foot forward, and you don't want to immediately turn off anybody to your offer, right? So the best offer that you can make, try to make that the first time, right, within reason. Obviously, your agent's going to work with you to try to save you the most money. But, if we give you a range and we say, hey, it's your decision what you want to offer, we may ask you a few times like, hey, is this the I'm going to walk away offer, right? So you put that offer in, and if they don't accept it, you're going to walk away, right? So that's something you want to consider when you're making an offer. And then always be prepared to negotiate. So I say that because, you might walk into a house and you might be like, I love this house because of this beautiful chandelier. And, the seller's saying, hey, I want to keep that chandelier. I actually want to take it down. Be prepared to negotiate on that. And, if it's $100 problem and you're buying a $600,000 house, is it really worth, possibly losing this house because you don't agree who should take the chandelier, right? That's something to keep in mind there. So the next slide, we're just going to go over some basic numbers for a $550,000 house in this area at 6% interest. So you're looking at $39.55 normally. And then for closing costs, it's up to 12 grand, right? So you don't necessarily need to have that 12 grand saved up. I'm actually going to show you how to get that closing cost covered here shortly. So you would actually pay zero of that 12 grand. But the monthly payment is something that's, we really can't fix that without the interest rates going down and, getting your loan at a much lower interest rate. Something else to think about too. I know that number seems super high for a lot of you people looking, like 4 grand is a lot per month to pay for a home. But the thing is, you can find roommates. If you have a spouse, they can kick in with this. Our BAH is up quite a bit at this point. I think you guys are making what, 2,700, 2,900 a month or something like that in this area. Just starting off at the the E4, E5 level. So, I mean, it's not too far off from where your BAH is. And if you get that extra support, you definitely can make this happen until you can refinance. If the interest rates do drop back down to like 4% or so, when you refinance your home, that payment will also drop. You're talking about maybe $1,000 difference at 4% interest. So something to consider. So I talked about saving you that money, right? That 12 grand that we were talking about. This is the ways that we can do it. So the VA limits what veterans can be charged when it comes to certain expenses, right? That's one way. You can also ask the seller to pay all of your loan related closing costs up to 4%. So basically asking for that 12 grand seller credit, getting them to cover, all your prepaid taxes and insurance and origination fees and all of those things. The last thing is just be wary. There's no guarantee that the sellers are going to give you that, that concession, but it's definitely worth it to ask. I've worked the last 2 VA loans that I did, we grouped in closing costs, and the only thing they came out of pocket for was the earnest money. So it's definitely possible to make that happen for a lot less. I mean, you can get into a home with $1,000 in your pocket for sure. Once your offer is accepted, the seller is legally obligated to sell you that home. Escrow is going to open once your offer is accepted. That typically lasts about 30 days here in California. During this time, you're going to do your home inspections. You're going to give your lender all the required docs, and then your home is going to be appraised. So a caveat with the VA loan is that they must do a VA appraisal. It normally takes about 10 days for the appraiser to get out there, and then another 7 days for you to get the report back. I've seen it happen a little bit quicker, but not very much faster than that, at least in this area. A note here, before your contingency release, which is like your safety net, right? So the contingency is a way for you to walk away from the deal without being charged anything. That normally lasts about 17 days. But if the home's not up to your standards, or the loan doesn't go through, or it doesn't appraise at the price that you want, you can walk away from that contract at absolutely no cost to you. So this is a pretty awesome part of the process. All right, we're almost finished. So while on the contract, avoid taking on new debt, such as buying a car. Don't change your job. Don't move money around in your banks. Stay on top of your bills and be mindful of your credit card limits, because they will pull your credit right before they issue the loan for the house. And you definitely don't want to have a missed payment right before you go to try to get a home loan. Home inspections. So this is happening during your contingency period, like we talked about. They're not required by the VA, but my suggestion is that you do always get one. This allows you to get somebody to come in and look and assess all the major and minor issues of a home. If you move into a home that was built before the 70s, I would suggest getting a plumbing and sewer inspection as well, just because those homes often have the old cast iron pipes that if they were to have a small leak in them or a rupture, you'd pretty much have to replace the entire pipe. So it's definitely worth getting that inspection. These home inspections also protect you from life-threatening problems like mold or faulty wiring that could cause a fire. So that's definitely something that's super important. And then, if you find out there's too many problems on your home inspection, you can just pull that inspection contingency and say, hey, I'm walking away. While those home inspectors are there, they're going to be looking at your electrical, your plumbing, your roofing, your heating and ventilation, hopefully air conditioning. It's a rare thing to find around here. And then they'll even check your foundations as well. You're also required in California to get a termite inspection. More than 30 states require these inspections. Try not to pay for this. That's my advice to you all, is because sometimes, the inspection itself is not expensive, but you have to get clearance for any problems found, which means that somebody has to come in, fix it, and then somebody has to come back and say, hey, yeah, it's fixed. And this could cost you thousands of dollars. So you definitely want to have the seller pay for the inspection and have the section 1 and 2 clearance included for the seller to pay in the contract as well. A good real estate agent is going to work all those things out for you. Just tell them, hey, yeah, definitely want them to take care of the termites. And then you have to have that clearance letter to fund the loan, right? So this has to happen in order for your loan to be funded in California. So make sure you get it done. The VA appraisal is pretty much the last thing that happens in this process, as far as the escrow process before the close. And what's going to happen is the VA is going to send an appraiser out, and they're going to look at the home, and they're going to make sure that it meets what's called minimum property requirements. Basically that the home isn't going to fall over on itself, or you're not going to be able to live in it. This seems like a good protection for you, but it's also a really good protection for the banks, right? So the banks want to know that their investment's going to be safe. So they're going to send this appraiser out. And this is another thing that's mandatory to happen before you can close on a home. And the last part of this process is going to be the close. So it varies state by state. It takes about 3 days in California. So I've seen it happen in 2. But they're going to do the signing of the docs. So you're going to go into the escrow office, or they're going to email you over paperwork where you sign all of the documentation. The lender is going to fund the loan. So the money is going to get pushed over for the purposes of buying the home. And then it's going to get recorded. Once your loan is recorded, you're going to receive the keys, and that home is yours. One thing to note is try not to start the funding of your loan right before a weekend, because until it gets recorded, you don't have the keys, but you are responsible for it. So you'll have to pay the interest and all of that stuff over the weekend, because your loan is technically funded, right? So you want to close before Friday. That's the way I would say it. Make sure that you record your loan before Friday. So last couple of slides here. If you've used your VA loan, can you use it again? Yes, that's the simple answer. So once you earn the VA loan benefit, it's yours for life. You can reuse that